Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. Welcome to Bazaar Morning Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I am Reema Tendulkar. With me is Nigel here in the Mumbai studio, and Prashant joins us from Delhi once again. Hi guys, good morning. Once again, one eye on the market and one eye on what's happening at the India AI Summit. Prime Minister Modi will kick it off, and then we've got a power-packed agenda with industry titans and global tech leaders, and they will set India's AI ambition and agenda. Hi guys.
Hey guys, hi, morning. And I think the jacket kind of clearly tells you that I'm in Delhi, right? I think, by the way, I must tell you, Nigel, morning, that I got my, not 10,000 steps yesterday, I got my 25,000 steps yesterday.
Wow.
Because,
Amazing.
I mean, I don't know if you guys are checking. I mean, it's because there are the AI Summit of, once you're inside, there's a lot happening and it's great. But, in terms of getting from place A to place B, also because there are so many sort of global leaders, etc. I mean, I think best that you walk. So I think that is of course something which is uniquely Delhi in that sense. But we've got a market to track, so I guess let's just kick it off there and tell our viewers just the lay of the land this morning. There are a couple of big moves, and maybe we can just kick it off with U.S. equities, which of course is not the bigger part of the move. The bigger part of the move is oil, which I'll just get to in just a bit. But for what it's worth, S&P 0.5% higher, Nasdaq about 0.75%, the Russell 2000 about 1/3% up. So that's the overall picture. And just one thing, right? I mean, we've been talking about, and yesterday as well we discussed that maybe the momentum in large cap mega tech names is breaking off. The 7 or 8 large stocks, right? Maybe on charts, etc., is also breaking. But for about 2 or 3 days now, and this is very recent, it seems like they're starting to up days are followed by up days. So it's important, and we'll see, because I mean I think many people were reaching the conclusion that this momentum is kind of broken now. So it needs closer watching. Now, Nvidia was up about 1.5%. One more chip deal was a big one, a chip deal with Meta, which was announced. I'll go up to the big price move, right? Oil prices 4.5% higher, 70.5. Same time yesterday, we were talking about how we heard from the Iran foreign minister saying, well, we've reached an outline of a deal, a framework deal, etc., and details will have to be thrashed. But Axios, which is a well-respected, well-regarded outlet in the US, they reported that American military intervention against Iran could come sooner than later, sooner than expected. Some are saying, well, as we've seen, weekends are always when all this stuff has happened, at least in the last, year plus of President Trump. And maybe we could see escalation as early as this weekend. So oil, of course, jumping up. But it was not just oil, right? Gold was up 2%, silver was up 5%, and Bitcoin prices at about $66,000. I mean, that we saw. Dollar index is the other one, which is, of course, safe haven. So all linked, 0.5% higher in the dollar index, now almost 98 now. As far as the broader dollar is concerned. Now, FOMC minutes came through. You could read it either ways. Some said, well, maybe we need to pay attention to weaker labor data. But for me, I mean, I think this is, of course, the reason I'm highlighting this is because the other view was consensus. But it showed that many policymakers signaling renewed worries around inflation and saying that if inflation stays persistently above 2%, maybe we'll have to look at rate hikes as well. 10-year yield, 2 basis points higher at about 4.08%. That, of course, was the other indication from the bond market. Now, I'll just, as we've been doing for the last many days now, taking stock of where software stocks have landed last night, and in the US, that is. So, Infi ADR was up 2%. Wipro was up about 0.4%. This is a space which has fallen, in about 11 out of the last 15 trading sessions. So this is a little bit better in terms of the screen. EPAM, Globant, Cognizant, and Accenture all seeing recoveries, but these are small recoveries in light of the 20-25% sell-offs that we've seen come very, very quickly. So, it's a sector which is being heavily debated in the US, and I think here in India, of course, as well. And we'll play out sound bites of N. Chandra, chairman of Tata Sons, somebody who's actually worked in the software field, heading TCS for a number of years. We'll, of course, also hear from the current CEO of TCS, Krithivasan, on some of these aspects. I'll just tie in with the levels here. So the Nifty, 25,780. I mean, the numbers don't change in that sense. That's the resistance, and the support, 25,450, is the support on the downside. As we've been saying, I mean, the market remains in a range, and that has remained true. Yesterday, the Nifty ended, I think, about 50, 60 odd points lower, largely on the back of the IT pressure. Today, I'm not sure if the IT stocks, there's not going to be a great impulse to come in and buy, but maybe slightly higher across the IT board is what you'd expect. And that perhaps shows up in the Nifty as well. 40 odd points is the implied open on the upside. Nigel has walked across to the wall with the F&O positioning, the stats. Nigel, take it away.
Well, that's right. You'll want actually some build on in terms of that green start that you're seeing of close to around 40 points or thereabouts. In the last few trading sessions, any kind of dip has got bought into, which is good news. The institutional participation, well, it's been relatively lower. But institutions, as I said, well, they were net buyers. Close to under 1,500 crores is what they bought. And the FIs have bought close to under 1,100 crores. But you need to note that the gross participation this week itself is lower by close to around 50% if you compare it with the previous trading sessions in February itself. So FI gross participation sharply lower, though they have been buyers, which is good news from a market perspective. But we'll have to wait for them to come back in their full fury to, in fact, see what is their intent from here on. On index futures, there were some shorts that got covered and there was some long addition. So the swing factor out there was close to around 7,000 contracts. The short position, though, continues at close to around 77%. Now, that's the lowest you've seen in more than 3 months, actually, in terms of percentage short positions from the FIs. So there has been quite a big short covering bounce that we've seen from around 92%. That's come down to around 77%. The FIs, they wrote more puts than calls, which is encouraging in an uptrending market. And also some of those calls that were written earlier, there was some packing of the bags, there was some unwinding of those positions. So the calls written, they were shedding, while you had the puts that were getting written from the FIs, which is good news. That's caused the Nifty PCR to move from around 0.64, just around 3 trading sessions ago, to around 1.22 odd. So pull up a couple of strikes. The 25,800 call, well, saw a good amount of open retrocession, close to around 20 lakh shares out there. The premium ballpark around 150 rupees. The 25,700 put as well. There was a good amount of addition out there, and there is a sense that there was some writing out there, which brings us to the levels. Going by the writing, you're seeing added on the 25,800, 25,850 call, well, the 26,000 mark. That becomes the crucial resistance mark that you're looking at. And in terms of a reference point on the downside, the first level will be the 20 DMA. So ballpark around 25,550. You don't want that level to get breached on the downside. The tech index, yesterday actually it ended sharply lower. But I'll tell you what, it came off considerably from the lows that we saw in yesterday's trading session. So it bounced up close to around 1.5%. And given that if this can hold out, the deeper one is the February 13th low of around 31,400 odd. If these levels can hold out, you'll believe that there is some more relief rally that's left in these IT stocks. So they'll have to participate because the Nifty Bank has been in spectacular form. So if you get some contribution from the tech index, we could very well be near around that 26,000 odd mark. The only problem is geopolitical tensions are creeping up yet again, and that's caused Brent crude prices to spike up. But when Brent spikes up, the oil producers could gain. So ONGC and Oil India could be the stocks in focus for today's trading session. Net, GIFT Nifty suggests a positive start. You'll want to see some build on from there on.
Indeed, we've had 3 positive days, consecutive positive days. So it's been a good run. Let's hope the momentum continues. Let's get to the equity calls then. It's Mahesh Nandarkar of Jefferies who says improving corporate EPS growth over the last 5 quarters has made them more confident of their bottom-up 5 percentage point FY27 MSCI India EPS growth improvement forecast to 15%. Ex-FIT, that stands at 16%. He says there are top ideas within the company showing strong earnings improvement in FY27 versus FY26 are Ambuja Cement, AU Small Finance Bank, Axis Bank, Bajaj Finance, Bharat Ford, Chola Mandalam, Eternal, Godrej Properties, Hindustan Zinc, JSW Energy, Mankind Pharma, Samvardhan Motherson, Sona BLW, Star Health and Voltas.
I just want to quickly read out this quote coming in from Rhythm Desai of Morgan Stanley, who says that earnings recovery extended in the third quarter as growth beat estimates driven by top-line strength. He says broad market earnings outperformed the narrow market, while earnings estimate revision breadth and depth improved during the third quarter this season, suggesting that revisions may have bottomed, that is, downward revisions may have bottomed. He adds their best bottom-up ideas after earnings are that they are overweight in Polycab, Lenskart, Shriram Finance, Grasim, Tata Steel, IOC and Eternal. They are underweight on Dixon, Berger Paints, State Bank, even SBI Card, Shree Cements, sorry, just want to say not SBI, but SBI Card, Shree Cement, SAIL and SRF.